Hello, today is August 4th, 2021, and it's time for some new stock picks and other investment recommendations. Before I do that, I'd like to take a couple of minutes to review the investment recommendations from this time last year. As everybody probably remembers, summer of 2020, we had protests on the streets, Black Lives Matter, and other type of protests. And we had about 5 months of recovery after the initial shock from the first round of lockdowns from COVID. And the central banks had already begun their monetary policy easing, quantitative easing, and asset purchasing and so on. So back then, our recommendations were to look to buy residential real estate, especially single-family homes, with home offices if possible, because that's what everybody wanted because they were working from home. And a year later, the Canadian Housing Price Index for single-family homes, there is no way to separate out the ones with home offices, just on average throughout Canada, is up 28.6%, astonishing 28.6%. This is to June of 2021, as there is a little bit of delay in gathering and reporting the data. This is extremely unusual and not unexpected as we predicted, primarily due to the lower interest rates, the monetary policy, and quantitative easing. Our next big recommendations was to buy stocks, and we said the S&P 500 index is about the best group of stocks that one could buy at that time. And two funds that I specifically mentioned, RBF 5911, S&P 500 currency neutral, and RBF 5137, S&P 500 in US dollars, are up 32.1 and 25.6% respectively. And the next big recommendation was for private equity, and the private equity fund that we use, the Kensington Private Equity Fund, is up 34.3% in the trailing 12 months to the end of July. Now, we also gave some stock recommendations. The three top stock picks at the time were Ruger Firearms, which is down 4.8% year over year, United Therapeutics up 65.2%, and Garmin up 57.1% for an average of 39.2% in US dollars, and that compares with 32.9% for the S&P 500 total return in US dollars for the same time period. Going forward, we think the Canadian market is better valued than the US market. The US market is fairly fully valued, but stocks are still a good place to be, and so is private equity, and so is real estate. We continue to recommend precious metals as a counterbalance, as a defensive kind of position against stocks and real estate and other risk-on type assets. But we also have some new stock picks here. First one is the Royal Bank of Canada. Canadian banks are highest quality banks, some of the highest quality banks in the world, and the valuations are fairly reasonable for what they are. And Royal Bank is the premier bank in Canada, the symbol RY on the TSX. and Canada is relatively undervalued compared to the US. The next stock pick that we have is Canadian Natural Resources, symbol CNQ on the TSX, an oil and gas company. If investors are okay with Canadian oil and gas companies, this is a good one. Valuation is reasonable. Inflation is likely to continue to be higher than average, and energy in all forms is likely to continue to benefit from that trend. And the Canadian oil and gas sector is undervalued, in my opinion. And the third stock pick for the next 1 to 3 months, possibly a year, is Silicon Motion Technology, symbol SIMO, a tech stock, a semiconductor stock. Good balance sheet, strong balance sheet, decent profitability, reasonable valuation, and something to diversify away from more cyclical energy and banking, even though semiconductors are also cyclical. But they're kind of offensive stocks for higher returns for the next 3 to 12 months. If you like a second opinion as to whether these stocks fit in your already well-diversified portfolio, please give us a call. And thanks very much.